Hi guys. Welcome to my channel. In this video, I will summarize the possible outcome which may happen in Q3 and Q4 2021. If you're interested to know my strategy, you need to keep on watching. This is my overall inflation outlook on the economy and the possible processes and outcomes that may happen from now to December 2021. The Federal Reserve has revealed the details on transitory inflation, meaning it may last 6 to 9 months. Inflation is likely temporary, meaning inflation could be elevated in the short term. There is no need to adjust the interest rate. All else remains equal. Inflation may continue to rise from July to September, beyond people's expectation. There are two possible outcomes for rising inflation. First, the Fed may turn to quantitative easing when short-term interest rates fall nearly to zero and the economy still needs help. Quantitative easing helps the economy by reducing long-term interest rates, making business and mortgage borrowing cheaper, and by signaling the Fed's intention to keep using monetary policy to support the economy. The Fed wants to keep their promise and only raise interest rates after 2023. Second, when inflation is too high, the Federal Reserve typically raises interest rates to slow the economy and bring inflation down. Likewise, if inflation is too low, the Federal Reserve typically lowers interest rates to stimulate the economy and move inflation higher. There are two possible outcomes for rising interest rates. First, inflation remains stable and within people's expectations. All asset classes are likely to drop in value, especially in property and stock market. If the stock market tanks 30% in value, the Federal might step in and reduce the interest rate. Metal and cryptocurrency are likely to recover from a V-shaped recovery. Cash is king in this situation. So do dollar cost average into an asset class when blood is on the streets. This is considered to be a deflationary environment. Second, inflation continues to rise and lead to hyperinflation. Inflation may continue to rise after raising interest rates because there is too much liquidity in the market. It is too late to step in and take control. A higher interest rate might be needed in this environment. However, if interest rates were raised at an enormous figure, it will cause people to default on their housing loan and ultimately lead to a drop in property value. Gold and certain stock equities may drop briefly during the start of the rising interest rate, but in a long-term perspective their value will increase. In view of the different possible processes, they only had one outcome: the value of all asset classes will grow. Debasement of currency might happen, meaning lowering the value of a currency. To become wealthy, you should hold a basket of assets. For example, stocks, property, cryptocurrency, physical metals, index funds. You should also have a war chest ready to pounce on a cheap asset when blood is on the street. I aim to allocate 30% of my entire portfolio to be my war chest.